Good morning, good afternoon, and good evening, one and all. Welcome to the next edition of The Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious, hardworking co-host, Mr. Matt Stanley.
I appreciate that. I appreciate you. Very hardworking. Was up on the radio this morning, talking about Trump and his tariffs and what's happening in Venezuela while everyone else was asleep. So I'm extremely hardworking sometimes. Hope everyone's well.
Well, everybody's well. I mean, markets have been on a slightly grind higher as the geopolitical support seems to keep pushing the markets higher, where the ambiguity and the question marks around the impact of all the tariff talk keeps markets under control.
Do you know what? It's a very good point. But I was reading this morning. We wrote something. I won't share it here and now because it's about 16 pages. But let's just start with that ambiguity. But did you know? Hang on. Did you know that since, hang on, talk amongst yourselves. 1 second, 1 second, 1 second. I've got it here. That the S&P is down 8% in since the 20th of March. Where is it? I've got it here somewhere. But yeah, look, overnight oh yes, over the past 30 trading days, the S&P 500 has declined nearly 8%, marking the first sell-off of this size since late October 2023. Government bond yields have also declined. 10-year Treasury rates averaged 4.26, down from a peak of 4.6 seen in January. We've actually downgraded our growth forecast for the US economy down to 2% from 2.5%. And look, I know I'm starting with a big headline here, but there's a lot going on, but it's resulted in pretty benign markets. But I think all this talk of tariffs, protectionism, the death of globalization, fracturing of economies, blah, blah, blah. It's just pretty poor news for people wanting to be optimistic and bullish. What do you think?
Well, I mean, it's very hard to find a theme to trade in this marketplace because, if you try to be bullish based on whatever information you get, one headline later and you're wrong. It's then there's nothing you can do to stop that. One tweet from the White House later and you're wrong. Or you could be right. It just depends on which way that tweet goes and what's said in that tweet. I think from a market standpoint, yeah, we're definitely looking at corrective territory in stock markets. I mean, it's already quote unquote entered correction.
Mm.
Has that been long overdue? Maybe. There's a lot to be said that the market rally from 2023 all the way to 2025 was a good substantial rally, and so financials were due for a pullback,
Or
and
take
a
some
lot
money. Like we said last week, take some profit on what's happened.
take some profit on what happened. And okay, now stocks are starting to grind higher again after coming off so much.
Yeah.
The favorite tech stock everybody likes to beat up right now is Tesla. But Tesla kind of returned to its pre election price level,
Yeah.
which is probably more in line to where the value should be versus being up at $450 a share, more like $250 a share. But we're not stock speculators nor stock analysts on this show. We like to talk more about the liquid assets in the world.
Yeah, we do. But just on Tesla, I mean, sorry, just on Tesla, but I tell you what's a fascinating story is BYD, right? Which is the Chinese uh, electric car manufacturer, Build Your Dreams. I was looking at their numbers the other day. In 2022, they sold like 430,000 cars. They're on a pretty torrid. They've been going through a pretty torrid time. Last year, they sold like 4.6 million, and they've got this
Yes.
new 1 megawatt charging stations they're rolling out in China in April. They want to bring out 4,000 of these stations, and you can get a full charge, 400 kilometers of range in 5 minutes. I mean,
Yes.
talk about the death of the combustion engine in China. I mean, we spoke about it last year, but that is an aggressive strategy. They're now taking
Well,
over the market size in electric vehicle manufacturing from Tesla. They're $100 billion now revenue. I mean, that is an extraordinary story, that BYD.
and it is. And if you remember also, the EU and the United States put 100% tariffs on Chinese EV vehicles to protect the domestic EV car market. But the Chinese product is a very good product. I mean, they've been making advancements in the battery technology, the energy storage, and the energy transfer, which is what you needed to do with EVs to make them more commercially acceptable and to get rid of a lot of the complaints people had. Oh, charging my car for 30 minutes to make the next leg of my voyage versus a 5 minute charge, I'm in and out and gone. Um,
Yeah.
I haven't read, to be perfectly honest, the statistics around these 1 megawatt charging stations and how they work and how does that, how do they keep the battery cool so that it doesn't overheat while it's charging, so you
Yeah.
don't have leakage or damage to the battery. There's a lot of things I'd love to learn more technically about it, but it sounds very promising and very interesting. And yeah, it does put a lot more pressure on the internal combustion engine. It just does the EU and the USA decide that they can allow Chinese EVs back into the market without 100% tariffs?
Well, okay. Two things. Let's two things on that. One is this is actually a few things to pick out there. One is that's a really good point about the drain on battery life and what it means for overheating. But it's not that. It's they can't just suddenly say we're going to roll out 500 of these 1 megawatt charging stations in April as part of their wider, broader plan to establish 4,000 of these charging stations. It's the drain on the grid that's the big problem. But China invested in that a long time ago, right? So
Sure.
it's an infrastructure thing. Europe doesn't have that. Here's the other thing about that: 100% tariffs. The subsidies still exist in Europe of people buying electric cars over internal combustion engine cars,
I believe they do in certain jurisdictions still, yes.
but only if they're European made.
Or Tesla, or US made.
I'm sorry, that is just bullshit. That is, we have this, we have this agenda, and I get it about renewables and lower carbon and all that kind of stuff, but only if that is supportive of the EU economy. So you can't
And
have
this,
one crusade and not another.
well, this has been my probably one of my biggest complaints, rants around the green transition in Europe is, China makes very cheap solar panels, yet they are tariffed at a much higher rate to protect the domestic solar panel production markets in Europe. China makes a very good quality EV, yet they've tariffed them now to where they're more expensive than a domestically produced EV, which may not have the same range and the same technology that the Chinese one has. And so it's a bit of, you're talking out of both sides of your mouth. Yes, we want a green transition, but only on where
Yeah.
it's protective of our industries, not we need to save the environment.
But don't you think that actually this, without wishing to sensationalize anything, the BYD story for me is what will be used, I reckon, in economics classes for the next 100 years, in how robust and resistant the Chinese manufacturing sector is to external factors. There is no stopping, and I'm using here in the prism of the Middle East. There is no stopping BYD rolling out the fleet of cars they are to say the Uber fleet here, right? They're cheap, they're nice, they're quick to charge, they're good for the environment, they're cheaper than the alternative at the moment. Uber, what's long been the sort of executive taxi here has been a Lexus. But you're seeing a lot less people buying Japanese, a lot more people buying Chinese. Economies of scale comes into it, but there is seemingly no stopping the meteoric rise of BYD. And I think even if they say there's 100% tariff on these Chinese electric vehicles, I still think they'll come in at a price point that will make them cheaper than the European rivals.
Well, that was, I think, their biggest concern is that I think the Chinese, they have a wide range of price points for their BYD and also their Neo, and I think there's the one other
Yeah,
company whose name I forget, but
yeah,
so they have everything from, you want the cheap city runabout, which is, you can fit two people and a couple of bags of groceries in, or if you want to have the luxury long range car that's synonymous with a Porsche Cayenne. And they have everything in between. And so that's
yeah.
where, that product offering, covering all those different spectrums, allows them to take more and more market share from everybody because they're focusing on the entire market, not just on a segment of the market.
Well, look, I mean, I mentioned this last week. and don't tell anyone. Okay, don't tell anyone. I'm looking to buy a Chinese electric vehicle. Okay,
Well,
don't.
I still have my Tesla, so
I
I'm
know, but listen. Do you know what's really interesting? At the moment, I drive a massive, big-engined, American-made GMC. Right, big Alpha. Get out of my way. And I am pretty much convinced I'm going to move to this Chinese electric vehicle manufacturer called Li, the biggest car with the smallest name. And I mean, I don't need a car that has like the ability to take selfies in the back for the kids. It's got their own like cameras and all. But as much as I like buying American, I'm sorry, it does seem a little archaic going forward. If I'm going to look to the future of where cars are going to come from, it is going to be China. Am I not Donald Trump's worst nightmare? I mean, I probably am, but am I not his worst nightmare in terms of a consumer?
Well, no, I don't think you are because again, you're not sitting in the United States, number one. Number two, you're sitting in Dubai, which is kind of the nexus hub of a lot of different trading activity. And so you do become kind of like a focal price point of Dubai because you have the influx of European, US, and now Chinese automakers all hitting that market. And because your market is a pure import market. There's no other way to supply a car. Dubai is not building cars.
No.
Um, the only thing I think does it play well into and maybe this plays into the whole idea of the GCC companies trying to pivot away from being a predominantly oil energy driven economy to allow the non-internal combustion engine into their markets to compete with the internal combustion engines, just to diversify the energy demand pool
Yep.
and to show that they're trying to do something outside of just bringing another 5 mile to a gallon Ford F-350 pickup truck.
Oh,
We need
look,
20 million of them.
don't get me wrong. I still like those cars. I do still like those cars, and I think you're right. And this is still an energy podcast. People don't switch off. You have tuned in correctly, but I, I just think it's people looking at things in a much different light. I remember, I think I mentioned this as well. Forgive me for repeating myself from last week. I remember an episode of Top Gear with old Jeremy Clarkson and James May and Richard Hammond. It must have aired, I reckon it must have been, and let me find out, when did the Top Gear episode air re Chinese cars? And I remember watching this guy, not a chance, not a chance. When did it come out? It came out in, one second, searching the web, 2012. And it was when they went to Beijing and they were testing all these Chinese cars, and they said, they reckon by 2020 that there would be a significant part of the automotive industry in Europe that would be Chinese manufactured. Now, of course, we had COVID, I know, but I certainly looked at it and thought, I can't see it. I can't see it. And now I'm looking to buy one. It's weird. Anyway, let's talk about some of that delicious dirty crude oil, shall we?
Because it can lead back into the story of BYD, Lee, and Neo all roll back into the destruction of Chinese petroleum on-road demand that we've been talking about, and the proof is in the tasting of that pudding. I mean, look,
It
if you
is.
have all these EV cars being produced, being sold in a variety of markets, every car eats into the global demand for gasolines, for diesels. Yes, it increases demand probably for LNG because you want that for power generation versus, or even coal. But
Yeah.
nevertheless, it does start eating more and more into the full demand profile for consumer road fuels.
Well, that's the trade, isn't it? Because if you've got electric, the say the new fleet of vehicles that are going to come out, say by in the next 5 years or by 2030, and the drain on the grid from 1 megawatt, 4,000 charging stations in China. That's just in China. Say you want to roll that out throughout Southeast Asia, and then you want to go into the Middle East and then Europe. I mean, the drain on the power grid is substantial and the infrastructure cost is substantial, but that's where everyone wants to go. We want to be zero carbon by whenever it was, according to the old Paris Accords, etc. But power generation for getting that kind of infrastructure in place is significant. Where does that come from? You would argue gas.
Well, I would say gas is probably the number one, at least in a lot of other jurisdictions, it's probably going to come from natural gas burning, if not coal burning,
Mm.
just to create that. But then when you look at it from green power, so solar and wind, if we want to go down that road, the call on that energy to power EVs versus taking that energy to produce green hydrogen, which then goes into green methanol, green ammonia, and bio LNG production, it does create that who's going to pay the higher price for that electricity. Does it go to the consumer or does it go into the industrial production? Because I don't think there's enough around to say you can do both.
No.
And so it does cause, I think, a bit of a pause of how do you put those investment dollars to work if you assume that we need to produce green methanol for the for the world maritime fleet to get rid of the fuel oil that the ships are burning, or do
Yeah.
we produce green power to go to all these EVs, which will displace all these cars and trucks that are on the road today, which also produce carbon emissions and greenhouse gas emissions and have a far larger impact than what's currently done on the maritime industry.
Yeah, I mean, look, I think this is it's a really interesting conversation because, of course, all of our conversations are interesting, but this one in particular. But I wanted your opinion on that because, to me, I think it's the path to sort of zero carbon emissions within certain countries is a little clearer than it was because we're burning more at the moment, right? I know that sounds ridiculous. There was this delusional sort of like, right, it's got to be zero carbon and we'll do whatever it takes to get there, blah. But and everyone kind of went, well, actually, it doesn't really make any financial sense because renewable fuels are so much more expensive. But let's say we're talking about this BYD story again. So there'll be a lot less call for end user fossil fueled hydrocarbons, gasolines, diesel, etc. within the country. Lots of it will be exported to the maturing economies, the growing economies, to East Africa, Southeast Asia, etc., etc. On the shipping side, though, right, the shipping fleets, it's clear to me that the people wanted to burn biofuels, methanols, ammonium, etc., even LNG bunkers. It seems clear to me that ships will continue to the way that investment will go on the new builds. That there'll be scrubbers. They'll burn point 0.1 in the eco zones, and then it will be a high sulfur, and most of them will be fitted with scrubbers because it's the cheapest way to move a ship from A to B. It's not
Well,
an
and you still have a lot of work being done on onboard emissions capture. So if you get onboard carbon capturing, where you're reducing your CO2 emissions and other greenhouse gas emissions and retaining those captured materials on board a ship and then disposing them into a disposal facility when you get to port, that could be a far more efficient use than trying to rebuild the entire maritime energy infrastructure system because it is not only changing what's burned on the ship, it's building the bunker barges, the terminals, the
yeah.
production facilities to make this new fuel, all that other investment that has to happen to order to make it a viable system. And when you have people talking about, oh, we need a global carbon tax of $300 a ton in order to make this transition happen, who's gonna want to pay that bill?
Yeah.
Because
Yeah,
that
look, I
becomes
think
substantial. And I think with the current disunity you have in the global economy right now, it'd be a very hard thing to try to get any type of consensus around what a global carbon tax should look like.
yeah, I mean, it's funny, right? I think 2025 Q1's been, like you said, ambiguous. We're going to talk about tariffs in a minute, etc. It's markets seem twitchy, but let's touch on that in a minute. I'll tell you the other thing as well. I think 2025 will be the year of the start of the transition, where you will see fossil fuel demand top out, right? Peak oil demand. I do think that we're in that kind of transitionary phase, especially in China, where complacently everyone has just thought would grow exponentially forever. That adjustment is happening right now. I'll tell you the other thing as well. Everything's become a lot more efficient. Engineering has become a lot more, has evolved a lot more. I'll give you an example.
You're
We
starting to sound like me.
well, no, it's frightening, isn't it? Absolutely frightening. I'll give you an example. So we moved house, renovated a house, and we put in new air conditioning. Air conditioning being really the biggest cost here because you don't need to heat your home, you cool it down in the Middle East, right? My air conditioning bill has halved for a bigger house compared to where I was last year when we were renting, and it was like a 25-year-old system. And I was talking to my missus about it, and she was like, "Well, why is that?" Purely because the engineering is a lot better now. So I think that that's going to be a big part of it. Bear in mind that we used to burn fossil fuel production to power the air conditioning, the electricity, etc., etc. Now it's LN, now it's gas. But things are becoming a lot more efficient. Lots more is being rolled out, and I think that that's going to play a big part as well in the sort of, I wouldn't say destruction of oil demand, but the softening of oil demand over the next few years.
Well, it is. I mean, when you look at it from the maritime industry, report from last year had eco ships, which are the more fuel efficient vessels, basically are now at over 33% of the entire global fleet are now classified as eco. So
Right.
they're burning one third to, one third to one half the amount of energy, fuel that a ship that they replaced was burning 5 years ago. And so all that just plays on the global fuel consumption demand. You look at jet fuel, jet engines.
Yeah.
All the new jet engines coming out are more fuel efficient. They burn less fuel. Rolls-Royce, Boeing, General Electric, they've all developed these new jet turbine engines, which they sip fuel. They just they still get the same type of thrust that you get from an older jet engine,
Yeah.
but at a fraction of the fuel consumption. And so when you start eating into that, because when you start eating into the fuel consumption, when it goes to the economics of transportation, that's where the majority of your spend is from a transportation company, is on the fuel to move your products or goods from point A to point B.
Yeah. I mean, hence why you're seeing balance sheets the likes of Emirates, airline that I love, of course, local one, but they're a great airline. But you know, what they did during COVID, we've touched on this before, and I spoke about this in January when I was going through when I was traveling, Europe and Singapore and wherever else I was. Um, in that we never see jet fuel demand ever returning to pre-COVID levels purely because what Emirates and Etihad and you know BA or whoever it may be are Swiss, of course. They invested in more fuel efficient aircraft. So they're still flying the same distances, still the same amount of passengers, if not more, but it's just with engines that are consuming a third less jet fuel. So yeah, look, this might be a podcast that Greta would listen to. Anyway, where are we? Brent, 73.37, up 36 cents. So highest we've been all month, really. Go on, tell me why.
Well, it's a combination of the sanctions on Venezuelan, which was announced 2 days ago,
Yeah,
where the Trump administration said if you're a country taking Venezuelan oil, you will receive a 25% tariff on your goods. Now the question is does that count for countries that are already exporting to the United States, that already have a tariff applied, such as China?
yeah,
Or is that additional to what is already on the tariff book? But nevertheless, it shuns more oil from the marketplace, causing prices to go up. I mean, the initial move higher, I think, was actually started by the sanctions of the first Chinese teapot by the Trump administration for Iranian crude. And that's what started our move higher and the grind move higher that we've had on flat price.
yeah,
Um, and so, there is an upward bias because I think there's a lot of reasons why the market has an upward bias at this point. I think you have the potential for increased sanctions regimes on both Venezuela and Iran, which would potentially reduce crude supply to the marketplace.
yeah,
B, from an absolute flat price level, I think a lot of traders, look at $70 crude and think, well, if it stays at 70 or lower, OPEC will not resume production from their voluntary cuts. They'll keep those barrels off the market. And so you want to be biased alongside just because of where we are on an absolute flat price level. And I think also there's a lot of questions that still remain. If any ceasefire happens in Russia and Ukraine, will it actually hold or will it just be a ceasefire in words and nothing really stops?
yeah. Look, we wrote, me and my colleague, he wrote this, he's sort of heads up our crude analytics now. So look, this is what we sort of view. I mean, lots of people are asking me questions about the tariffs. I mean, I tell you what's interesting about the tariffs. Our view is that we largely think that the Trump administration will sort something out with Canada and Mexico. There will be There will be some compromise probably on both sides, but more, I'd say, on the Canadian and the Mexican side. I didn't know that Canada are by far and away, well, I did know, but I didn't know the extent. Canada are by far and away the US's biggest supplier of crude oil, over 4 million barrels a day goes into the US system via pipe. And the second biggest crude supplier is who, Edwards?
I believe that's Mexico.
Correct. So actually, when you think about it, choking off US Gulf Coast heavy crude, Venezuelan, Mexicans or tariffs, whatever it may be, isn't necessarily a good thing. We're actually bullish Latin America and heavy and Canadian heavy sour diffs, especially with the disappearance of Venezuelan. But look, this is a really good point, and this is something that what we're taking a view on. It's going to be very difficult to implement these secondary sanctions, and you can read it here. I'll just read. Tariffs and tax a country imposed on goods entering its own borders. The US cannot force other countries to pay tariffs to it if the trade doesn't involve the US directly. Of course not. But what they can do is that they can put pressure on things like the import of Indian pharmaceuticals, for example. If they have evidence that India are buying Venezuelan crude, then they could say, well, if that's what you're doing, there's a 25% tariff on you selling us pharmaceuticals. Same with China on manufactured goods, whatever it may be. So that's very difficult to implement. This is another interesting one because Repsol are owed so much money from Venezuela. Will Repsol continue to import Venezuelan Marais crude? Or, will the EU kind of step in on that? And then we've got obviously Reliance. We think that Reliance will stop buying Venezuelan crudes. But look, just to close up this before I get your opinion about this, we see the Marais crude, the most sort of exported grade of Venezuelan crudes trading at about a $5 a barrel discount to Brent right now. So I think it will be interesting to see what happens. That'll be even more bearish. I'd be a seller at that diff because I think that goes to probably a $7, $8 a barrel discount to make it more competitive because with stricter sanctions being enforced, they're going to be under the pump. So I think they're going to command, wider discounts. I mean, what do you, that's a lot I've covered there, but what do you think? What's your opinion?
Well, I mean, I think with like with any other the sanctioned oil, it'll find a way to a buyer. I mean, it always has and always will. So, will the Venezuelans' crude vanish? No, it won't vanish. It just won't be moved on a more transparent basis. You'll see, a lot more blending happen, a lot more STS happening, and the crude will find go into a buyer, will go in as some other grade like Malaysian export crude or some other
Yeah,
um,
yeah,
label of origin that they use to obfuscate the origin of the crude itself. But nevertheless, I think that's what ends up happening. I mean, I don't see it going to zero. I think it just gets pushed around and covered something else and becomes more difficult to transact under it. Um, I think that it is a case that, if the Trump administration is playing their cards right, yeah, they don't want to completely penalize the U.S. economy just to go after Maduro and the Venezuelan regime. So it does point that they most likely will have to do something with Mexico and Canada just to ensure that that heavy sour grade that most of the refineries in the U.S. needs
mm,
and likes to run continues to flow unabated and with least economic impact. Because, I mean, the whole thing on the tariffs with Canada and the energy there, Canada really doesn't have any other place to go with their crude because they don't have the logistics to get it out
yeah,
of the Alberta region to other markets. So, yeah, the TMX pipeline, that's great. That just helped debottleneck their supply chain a bit.
yeah,
But they can't just immediately expand that pipeline to move all of their crude to the West Coast for export to Asia. Now, the one thing that is a bit unclear to me on the Canadian energy tariffs is that what if the Canadian traders just transport it via the United States to export directly via ship out of the Gulf Coast, which could happen?
What, and
Does
just pay a
that,
throughput fee for the pipeline?
well, yeah, you pay your fee to the pipeline that they would normally, or for the
Right.
barging. So there's a lot of other questions I would have about how those tariffs actually impact Canadian oil flows if they just bypass the U.S. market altogether, if there's no meeting of the mines, so they go directly to Asia or not. But then again, you're hurting the U.S. refinery runs because they don't have a lot of other barrels that can actually offset
Yeah.
those cheaper local Canadian heavy sands and Mexican import crudes.
Yeah, I mean that's why we're bullish on Latin American diffs like the Colombians, even Ecuador, something like that. Anyway, look, I'm conscious of time. I just wanted to talk to you about our well, I don't know, where is the Dangote refinery rank on our favorite subjects? It's up there, isn't it?
Well, yes, I mean, West African energy independence is, to me, one of the best subjects out there because it's not just Dangote, it's all the other refinery projects that are getting traction and building
Yeah,
up as well.
yeah,
Dangote, of course, is the leader one just because of the size.
yeah,
Um, but the interesting thing I find about the Dangote refinery is the flexibility that they have, or they've developed internally, the Dangote people, about matching their product slate to whatever market they're buying crude from, so that they don't have an exchange rate risk.
yeah. Look, I
Uh,
mean, this is what Victoria, my colleagues, wrote this great report yesterday. I mean, look, we are week, if not bi-weekly reports on Dangote because it is that much of a market mover. But the story this week is about the crude slate. I mean, look, you can see this sort of you can see this. Okay, I hope this. What color is that? Teal,
Green.
green,
Yeah, probably more teal, yeah. Or
teal or
maybe
duck
pine,
egg.
pine green.
Yeah, an Egyptian goose egg color, I would call that. Uh, sorry, don't worry about that from. You can see the Nigerians. I mean, Nigerian crudes here, which is below 100,000 barrels a day. Majority is Midland, and they bought some Angolan, and then they bought some Algerian crudes. So, the crude slate's incredibly diverse. And look, I want to get into that. You can talk about European. This was the kicker for us, wasn't it? It's not what happens to Nigerian crude and what the Dangote refinery means. It was the what happens to balances in Northwest Europe of finished grade gasoline that was long going to Nigeria. Look in March here. You can see this. I mean, yeah, it dropped significantly here. There were other issues. I think that was election time, but then picked back up more or less straight away. But you can see this sort of gradual falling off. November was a bit of an aberration. But look, I wanted to just show you what it means on here. This is our refineries tool. You look at refined products, and you can see here. I mean, look, you're the chemist among us, Edwards. You can bring us up to speed on what this means. But what we've got here are refined products that have been produced by the Dangote refinery in, well, let's use March. 360,000 barrels a day, 147 of which are gasoline, 124 diesel, and 57 jet. I'd need to check our numbers on the S&D balances, but that's a significant contribution to daily demand for Nigeria. This is something that lots of people didn't think they would get to. What have we got runs in March? 353,000 barrels a day. Bear in mind that the nameplate capacity is like 630,000 barrels a day, so they've got another 280,000 barrels to go. So, look, I mean, what's the chat on the tiles in Rue de Rhône about this? I mean, this is significant, right?
Well, it is significant because it helps push more and more energy independence into Nigeria. And into West Africa because it's not only what they sell into the local domestic market, but what they can export to the regional markets as well.
Mm.
So it does that one between Dangote, Soweto, and the handful of other refining projects. I mean, within the next 2 to 3 years, theoretically, West Africa should become an exporter of refined goods instead
Yeah,
of being an importer of refined goods.
yeah,
Now, the interesting thing about the African markets is also, can they get themselves into a point where they're buying cleaner grades of fuel versus their current import specs that they have, so that you can then help offset the cost of some of these more expensive refining processes to clean up the oil, so that it is a Euro 5 grade or a Euro 6
yeah,
grade of gasoline,
yeah,
which is again better for the environment, better for the population, and better overall for the whole entire economy. Um, the fact that Dangote can manage his own currency exposures by exporting, so currently there's been a big kerfuffle in Nigeria about the Nigerian government not supplying him crude on a naira basis. So therefore, he's stopped producing naira-based products to sell into the marketplace, and he's exporting everything.
yeah.
And he exported something like 1.7 million barrels of jet fuel to the United States. which, when you think about this 10 years ago, that would have been like, what? Uh,
What?
the only things
Yeah,
that went from Nigeria to the United States from petroleum space was either low sulfur straight run or Connie Bonnie condensate, which is a
yeah,
gasoline blend stock that went in for winter grade gasoline blending in North in New York Harbor.
yeah,
But now if you got a country that's actually finished jet fuel going into the United States, exporting diesel to Europe, I mean, it's a complete trade flow change that a lot of people were discounting for a long period of time.
yeah,
Um, and it does put
yeah.
incremental pressure on the European refining sector either way. It's kind of good that okay, Dangote is not going to be producing gasoline because A, his RFCC is going down for maintenance,
Mm.
which is quite common with RFCCs because they're very touchy, finicky pieces of refinery kit. I mean, if everybody remembers the problems that ADNOC had in getting their RFCCs up and running when they first built them,
Yeah,
I mean, it seemed like they were up and down about every month. And
yeah.
then the same thing with Alzor with their RFCC. So, they're not easy pieces of equipment to run, but once they're up and running, they're very efficient at destroying residual fuel and turning it into clean products for consumption.
There you go, people. That's your chemistry lesson today. He's told you. He's told you. But look, 73.44, I think we'll flirt around here about for until the end of the month. We've got another few days. It's Eid next week. Eid Mubarak to anyone celebrating. That's in advance. The moon
Yes.
sighting committee is yet to get together and see the new crescent moon. So in advance, I'll say Eid Mubarak. We won't be on air next week. And the week after, what we just spoke about Dangote, I'm going to steal every single word that Edward said because I'm down in Cape Town for the ARDA conference. The big Wiz Kepler is sponsoring it. Come and say hello. Um,
Now check
yeah,
out the BYD dealership in Cape Town because they're selling cars down there as well.
there you go. There you go, people. Okay, good to see you.
And for those of us in celestial phenomenon, this Saturday you got a partial solar eclipse in Switzerland.
There you go.
Don't look at the sun directly. Use a shadow box, but good thing to look at with the kids.
Yeah, nice. All right, mate. Enjoy that.
All right, thank you very much. Click, comment, like,
Yeah,
and subscribe. We're
like you
on
said.
Spotify, YouTube, and LinkedIn. And look forward to you next time around.
Ciao.